Okay, so good evening, everybody. It's Techriz here, and I'll be your friend, your host, and your tutor. And today we'll be talking about none other but position sizing and what risk management. It's something that I don't really need to talk about, but then I feel like okay, there are some persons who actually need to be brushed up in that particular aspect. So at any point of this whole class, if you stop hearing me, Manny, on behalf of everybody, because I believe your network is the strongest, just let me know. And at the end of the day, there's going to be an opportunity to ask questions. So for the crypto traders, we'll be talking about position sizing first. For the crypto traders, for the FX traders and synthetic traders, I believe Sabiki must have taught the lot sizing. If she has not, she will do that. I think she said it's the last thing. But then for the forex traders, we've gone over position sizing a lot. Position sizing is none other but your lot sizing. But I want to show crypto traders how you can actually use quantity to trade, like how you can basically let go of the whole leverage thing and trade without fear, right? So I'm going to have to share my screen, and let me just put up ETH USDT. This chart is weird, but then okay, let me share my screen first so that we can actually proceed for the crypto traders. Now, there is a way you can actually trade without having to bother about leveraging, right? About how many X leverage you're using, about whatever you're using. You just don't have to bother about anything. You just need to use your trading view and just a couple of steps and you're on your way. So what do I mean? Now, if you want to actually take a trade and you want to risk a certain amount, and you want to actually use the highest leverage, because like this, what actually geared me to learning this thing is that there was a time that a lot of persons in the space, I think back then at 2022, lots of persons were pulling up with like 4,000% PNL, 3,000% PNL. And then you find out that as naive as I was, I basically felt like, okay, those persons pulling up with like the 1,000% PNLs are making more money than those persons pulling up with just 20% PNL. But it's going to be a shocker to you that somebody who actually pulls up with a 20% PNL might be making more than somebody pulling up with like 8,000% PNL. And it's none other than your leverage. Your leverage does just one thing and one thing alone. Because then, crypto traders who are so naive, they didn't know that leverage means nothing, not like entirely. It means nothing, but then leverage helps you reduce the amounts you're risking on a trade, or it helps you. Let me just say fact, like let's say who is Paul on that class now? Okay, let's say me and Michelle, we are currently billionaires, right? And we are taking a trade on BTC USD, and then David comes around, and David is not a billionaire. David is just a thousandaire. God forbid, though. But David is just a thousandaire. David now can be able to open that exact trade that me and Michelle are able to open. Why? Because of leverage. Chicken, that's the only thing leverage does. The leverage amplifies your margin. So if you're using $10 to trade and you're using 100x leverage, the math is just simple. 100x times 10, which is about 1,000. It means you can open a position size of $1,000. But if I use that same $1,000 and trade, and I decide not to use any leverage, just use 1x leverage, do you know that both of us will be making the same thing per trade? Yes, because the only thing your leverage has done is to basically amplify your margin, right? And then, but your ROI, your return on investment, is going to be high because obviously you're using a small amount to trade to a big amount, obviously. So your ROI will be big, but my ROI will be small. But I mean, I can be using $1,000 and on 1x leverage, means zero, just zero, let's call it zero leverage, or 1x leverage is 1 times 1,000, it's the actual 1,000. Now, if I make 20% per trade, Bybit will only show me a PNL screenshot of 20%. But if David makes that same 20% with me, Bybit will show him how much PNL? 100 times 20, 2,000% PNL. So we basically have differing ROI or ROI PNL screenshots. but then we have made the exact same amount. We have made the exact same amount, right? So this is how you can actually do it easily with your trading view. I'm going to be sharing my screen now. Let me know when you can see it. Can you see my screen?
Yes, sir.
Okay. I'm trying to arrange this so it doesn't block me. Okay. All right. So I'm trying to like put the both of them on screen so that you're able to see. So you can, I hope you can see my buy bits, and you can see my trading view, right?
Yes, sir.
Okay. So now we're going to be doing something. So this is ETH USDT, right? Now let's say, for example, I'm trading ETH USDT. What am I seeing here, right? I'm not going to do any analysis, right? Because I'm not really in the mood. But let's say I want to trade this particular setup, right? Now, let's say I have this particular place as my demand. I'm not saying it's easy, but I'm just saying, let's say I have this particular place as my demand, and I want to just completely be a thief. And I want to take my trades from here, and I want to just target here. It's not even actually being a thief, it's the right target to do. But then now, this is a let me make it 5 hour. This is a 5 hour setup, right? Now, what I need you to do is that we can change this to what? ETH USDT, right? Change that to ETH USDT. I'm on perpetual features, cross mode, and then on the highest leverage. I don't really care about the leverage. On the highest leverage, you're going to see why your leverage does not matter. As long as your position size remains the same, your leverage does not matter. So yeah. So basically now this is our entry price, and you obviously guys know how to use the trading view now. So this is the whole position too. What I need you to do is, this is a 5 hour setup. I need to double click on the position too. So it brings out the data, the whole settings. Now you go to inputs. When you go to inputs, you put your account size, right? Now the account size is $50. That's how much I deposited there for this experiment. Yeah, $50. Let me make it USD. Yeah. Okay, yeah. So your lot size, just forgo this lot size, right? Forgo this lot size. Now sorry, Jerry. So your risk is what? I want to risk just $20 on this trade, right? I want to risk $20 on this trade. You can see that. Let me put this in back to one. Let me put this in back to one. Even yes, one. So I want to risk $20 on this trade, right? 20 USDT. The entry price, everything, don't touch it. It's correct because what is here is what has been filled into this place, right? So I have $50. I want to risk $20, right? Let's click on OK. Now, when you click on OK, you have to look at the position too. You're going to see quantity. See quantity here, QTY equals to 0.209, 0.209, right? I don't know if I should approximate that to 0.21, but then now you come to your buy bits, you're entering a limit order. Obviously, you guys know that limit order, the leverage is on the highest. Now the price of what the commodity I'm going to enter at what 3,259.51, 3,259.51. That's basically what I'm seeing there. Now, instead of dragging this thing, this ETH now is quantity, right? So you see order by quantity. If yours is in any of these two, just change it to order by quantity. Then click on what confirm. Then quantity, you have to put that amount that TradingView showed us, 0.09. But I'm going to approximate it to 0.21. I don't want so if you see a differing figure, just know it's because of the approximation. So we have sorry. I need to go back here. So we have 0.21. Let's just say 21. Can you allow me to put 0.209? Can it? Okay, no, it just allows two figures. So 0.21, right? Now, let us set our TP and SL and see if we're actually correct, right? Now, TP and SL. Our take profit is 3,743.96. 3,743.96. And that's approximately what? 101. That's approximately, you see, because of the approximation, it's supposed to be 100. Remember, we're risking $20. And 20 times 5 is what? 100. This is 5.06 R. So if is 100, so that's $100. Now, stop loss is what? 3,163.77. And you can see it's approximately $20 at a dot. Now, if I change the leverage, trust me, it's going to still remain the same. If I put it on 10x, right, and save, it's going to still what? Remain the same. Can you see? Still 100. And can you see? Still 20. So the only thing your leverage is doing, now you can see that, look here, the cost is going to be increasing. If you look at this, is tiny though. I don't know how I can increase it because this is a screen mirroring, but you can zoom when you're watching the distance. Now this is the cost. It's now charging $69 to open the trade, right? $69 to open the trade because of 10x leverage. This simply means that if I don't have $69 on this account, this means that if the thing comes very close to the stop loss, there will be a problem. So, but then at the end, no, I don't think. Yeah, okay, yeah. So the total cost of this trade is $69. But then look at, if I change it to 100x, you're going to see how the cost reduces drastically. And this is why those persons who use, you can see the cost is now at $7.5. You can see how that reduced. Those who actually trade with quantity are basically those who actually don't have so much capital, and then they want to use the highest leverage. You're always going to be able to trade, except your trade is not, your margin or your capital is now too small that the leverage cannot help you. Because imagine trying to open this with $1, it may not be possible, right? So except your leverage is now, your capital is not too small, that's when you will now have problems. So this basically works everywhere, right? That's how to actually trade the quantity, and you don't even need to bother about your leverage at all. You don't need to bother about your leverage. You can increase the leverage to the highest as long as the position size remains the same, as long as the quantity you imputed from a trading view after you had already imputed it into the whole position too, as long as it remains the same, what happens? What leverage does not really matter at all, right? So that is that about that. Now let's move to, I'll have to stop iPhone mirroring. Okay, let's move to the risk management. I wish I was with an iPad. I can basically do this. Okay, Euro JPY. I'm not really going on the chart today at all. I just want to like use this particular pair to show something. Okay. Okay. This pair is looking bearish. Okay. So down to the forex traders. I hope you guys are still there. You can be said to talk to myself because it's not going to be funny. Okay, still recording.
Yes, sir.
Okay. All right. So down to the forex traders, prop firm trading templates. Now, I'm going to actually talk a lot. I'm going to say a lot of things, but I just wanted to like keep taking notes because I have traded prop firms for more than 1 year. Every advice I'm going to give you is tested, proven, and will help you scale easier. Coming from someone who have made so many mistakes that you would not even imagine, I'm going to be telling you how I was able to take myself from this to that. So basically, I started my Prop M journey in 2023. I have not talked about this a lot, but I didn't have a single payout in 2023, right? 2023 was just about discovering, not like I was not making money, don't get me wrong. I mean, prop firm payouts. There's a different thing from making money from a broker and the prop firm payouts. So the making money from a broker was in such a way that I needed to scale up more. I didn't want to be doing just a normal 1K, 2K. I wanted big money. So that was why prop firm really depressed me a lot, because like I just needed to get it right. I needed to get it right. I needed to make money from it. So I started my prop firm journey in 2023. But April 20th was when I placed my first forex trade on a prop firm. So ever since then, it has been like so much of like a struggle. I'm not going to lie. And that was because I didn't have the necessary support I needed coming up. And there was just a whole lot of things that were just against me and all that. But then we are happy for where we are at today. If I'm going to give an advice to someone who wants to take prop firm seriously, there are two major things I'm going to tell the person, but then those two major things are going to be broken down into a whole lot of things. Number one is make sure you actually have your lot sizing calculation at your fingertips, right? That is one. And number two, make sure you have a specific plan, because the prop firm sphere is not a place where you just come and you trade anyhow. I see lots of persons breach accounts daily. I see lots of persons get into trouble daily. And it is just because of these people are not used to the whole prop firm scheme. If you want to be a prop firm trader, it requires extreme discipline, right? This is why till today I have respect for every single person who has said, I want to take up a prop firm and I want to trade. It requires discipline to trade prop firm. Check the industry. Sometimes you guys just need to use your brain and be smart. Check the industry. How many of these your idols have you seen trading prop firms? And when I see people who don't trade prop firms, I just say, this person is not a disciplined trader, because if he comes to the prop firm space, he's going to finish his account. And fine and good. The goal of the whole thing is to make money. I'm not judging anybody. The goal is to make money. My goal is also to make money. I'm not trading prop firms because I want to come off as one whatever. I'm trading because I want to make money. But then, if you trade prop firms, if you decide you want to go down the route of prop firms, you need to actually have top tier discipline. Many persons cannot. Many persons are trading in a very unsustainability manner and are calling themselves profitable. In the long run, these particular behaviors are proven to not work. What has been proven to work is what the more conservative approach of trading. And funny enough, it is this particular get-rich-quick idea that is being pushed to a lot of persons, that people actually get the wrong ideology of forex. You see people give up. You see people not want to. You see people, as in this our Tinubu regime, somebody thinks $1,000 is too small. I've had somebody who legitimately made $5,000 on an account. I told him, it was a funded account. I told him, close this trade. I know what I'm telling you. Close it. Close that trade. When you close it, delete that account from the MC5. Take up a trial account if you're less busy, or do something if you're less busy. And the person agreed with me and all that. And the person was like, came back the days like, I want to trade that. If I even post that 5K now on Twitter, they will not really bother me. But if I make like 12% on it, which is going to be 8K, that are going to heal me and all that. I was listening in pure disgust. And I just didn't even want to advise again, because I hate people who don't take advice. I just basically blatantly kept quiet and just kept watching. This guy blew the account. In fact, that is how it always ends. It never goes well. He blew the account at the end of the day. And then both the 8K he did not see, the 5K he did not see, The social recognition, zero. Nothing came his way. So if you're going to actually take the route of Profem, you need to actually be prepared because there's going to be a whole lot of like stumbles on the road. So before I actually proceed and before I go down further, for the XXX USD pairs, the major pairs, if you don't want to be wasting your time on going to, because since I started trading just EU and GU, if you've noticed, and just a few, maybe JPY, GBP, JPY, USD, JPY, because I found their price action entertaining because they just follow each other. I don't want anything way past like that. It should just be following each other. So I realized that what lot sizing calculation, I believe I've taught it and you guys know it, but then let me bring it back here. If you want to calculate your lot sizes easily, for XSS USD is only major pairs, Euro USD, GBP USD, AUD USD, NZ USD, major ones. The template is this. Your risk. What am I doing? God, I need my iPad back. I want to go and dash my iPad to my sister. Your risk divided by the pips, the SL pip, times 10. Right? Why times 10? Remember, for the XSS USD, what do you call it? 10 pips, how did they even put itself? Equals to $1. I think for the standard lot I'll be waiting. So, but this is the template. Risk divided by pips times 10. So let's say I want to risk $500 on a trade, right? Let's say I want to risk $500 on a trade. 500, my calculation will be what? You can be pressing your calculator too. 500 divided by, let's say the trade, or if somebody sends me a setup and I want to take the setup because I see that it looks like what I take, I just need to ask the person one thing. What's the entry and what is the pip? That's all. What's the pip risk? The person let me, okay, the pip risk is 10 pips. And I'm like, hold my beer. 10 times 10 equals to 100. Right? 500 divided by 100 equals to 5 lots. You're going to what? Take 5 lots on that trade at that entry. And when price gets to the SL, you're going to lose exactly $500. No addition, no subtraction. So have this at the back of your mind. Have it like on your fingertips, right? So that's one. Now, after you have known this, you need a specific template. And the way Profem works is this. You can actually be losing your money, but you don't realize on time, right? That's how Profem works. You can even be close to, like you can be close to danger zone. Danger zone, I call danger zone 9% and below. You can be close to danger zone and you may not realize because human beings get easily emotional, right? Now, Profems, their whole schematic of every Profem, they have what we call daily drawdown and they have what we call what? Total drawdown. Now, a daily drawdown is an amount you're not meant to lose in a day. You're not allowed to lose in a day. If you lose that amount, you have breached the account. It means you've lost the account. Because, there was a trend in 2023. Lots of persons were losing the account because of daily drawdown. And do you know what this we are doing? After they have not been, because how you lose the profit account is that if you blow it, you may not know. You come back to take another trade and they'll tell you not allowed, something like that, be broken, not available. Just one weird message from your MT5. So some persons will see those messages and be like, "Oh, you have reached my daily drawdown," and they'll come back the next day expecting that it's going to reopen. Oh my God, Profem has made money from lots of gullible people in 2023. The rise of Profems in 2023, they made lots of money from people because many persons were using the whole my broker, my decent style to come and trade on Profems, and they were losing millions of accounts in a day. In a freaking day. And these Profems have money. These Profems have money. But not just of recent, an investor from US got paid for 2,025 accounts on Funded Next. Please, you guys should go and join that giveaway. That's the biggest giveaway on the planet. 2,025 accounts. An investor single-handedly paid for it. That's $10 million. So you can imagine these prop firms have money. So you need to make as much as possible from these prop firms. In fact, that's why I always recommend, if you want to trade on your broker, trade on your broker, but please have a prop firm account, because to help you scale. You can't compare your $1,000 to my 500K live account. You can never. And that's the opportunity that these prop firms give you, but you don't realize it. You don't realize it at all. So the daily drawdown, back to the daily drawdown, let's say for this model, I'm going to make it simple. 100K account is what I'm going to be using for our explanation. Let me write it down. Why is this texting so? So I'm going to be using 100K accounts. I'm also going to be using funded next. Let me not betray them. I wanted to say FTM now, but funded next because. So I'm going to use funded next as an example. Now, funded next, the daily drawdown is, let's call drawdown DD. Daily DD, not DDO. Daily DD is 8%. Daily DD is 5%, which on a 100K account is what? Is automatically what? $5,000, right? And then the total DD, what am I typing? Total DD is what? 10%. Oh, good. Which is what? $10,000. Right? Now, if you lose more than $5,000 in a day, you've lost the accounts. Right? And let's say you did not lose more than, let's say on the day one, you lost $4,000. $4,000 will not reset by tomorrow. The $4,000 will keep remaining like that. Day two, you lost $2,000. Obviously, you're not close to the daily drawdown by any means. Day three, you lost $1,000. Do you realize you've lost day one, 4,000, you've lost day two, 2,000, you've lost day three, 3,000, sorry, 1,000, total of what, 7,000. You're just 3K away from the total drawdown. Now, day four, you lost 2K. Remember, it is not even anywhere close to what, the daily drawdown, but you're approaching the total drawdown. Now, day five, you now finally lost 1K, and then you breached the total drawdown. Your account will be seized. There's also another thing called minimum day rule, minimum trading days. Lots of persons also get this one. Now, a minimum trading days is the number of days you're required to trade before you're able to move on to the next phase, right? Because some persons get an account and they deploy an EA on it. An EA is an expert advisor. It's a bot. They deploy an EA on this account, and then this EA is past the accounts in like split seconds. On prop firms, you can't do that. You can't do that because you need to trade for at least some. In fact, every prop firm differs. I think FTMO one is 2 days, I'll be 3 days. The account I'm trading. Funding next one is 5 days. Funding pips one is 3 days. Yeah, I think. So it differs. Now for funding next, now we have minimum day of 5 days. It means you need to trade for 5 consecutive days. But let's say, for example, I have a profit target of, I'm on phase one. I have a profit target of 8%, right? That's the profit target for phase one. Let me be writing it down for people who might be interested in getting fundedness. Profit targets. Profit targets for phase one. Phase one, I'm going to call it P1. Profit target for phase one is what? 8%, which is what? 8K on a what? 100K account. Hope you're flowing. 8K on a 100K account. And then profit target for phase two. Profit target for phase two is what? 10%, 5% rather, which amounts to what? $10,000. Right? Now, let's say I'm smart enough and Jesus, sorry, Jerry. What's happening here? This is $5,000, not 10,000. $5,000. So let's say I'm smart enough and I pass my phase one in a day. I make $8,000 profits in a day. Remember, I have only traded for 1 day. I bought the account today, I traded it, and I made the profit target. The only thing you can do is simple. You're not going to be given a phase two account here. No, until you have reached the minimum trading day. So the next day I'll open a mini lots trade, maybe 0.01 lots. I'll just count to 20 or 10. I use 20 though, so that the broker, they not getting how the bots no go tell me say never refresh, or the website we go tell me say never refresh. So I'll count to 20. 1, 2, 3, till 20. When it's 20, I close that trade. It will not even incur any loss. It will just be dancing around $0.01 loss. Also, I'll close it. I'll go and refresh. We go again the next day. The next day I wake up, I do the same thing until you have gotten to 5 days. That is when the website is now going to what? The next phase button is going to now appear. Other than that, you will not be able to move on. So this is the whole thing. So I've explained drawdown, I've explained profit targets, right? And I've explained minimum trading day rule. So those are the 3 major rules, basically. And then you have what you call cycle counts. Like cycle count is like how long does it take you before you withdraw. On Funded X, your first withdrawal takes you 28 days. After it, your continual withdrawals are every 14 days bi-weekly, right? So that is that about that. Now, down to the templates. Now, there is going to be 2 types of templates I'm going to recommend. And the first one is for people who have a strategy that has a high win rate. People with a strategy with a very high win rate. And how do you even know this? You must have been trading. You must have been paper trading for a while. Paper trading, I mean, you must have been using your demo, trial accounts, and all of that for a while, right? So first one is going to be for those who actually have a working strategy that's in fact has a very high win rate, right? Now, if you're going to do this, you're going to split your total drawdown by 20 trades, right? Or no, I don't think 20. 20 trades. Okay. So for those who actually have a high win strategy, you're going to split your total drawdown by 10 trades. Now, if we divide $10,000 by 10, we are going to have what? $10,000 by 10 trades here. We are going to have a risk of what? Where is division sign in this rubbish MacBook? Don't think. Okay. Divided by 10 trades equal to what? $1,000 risk. So on every trade, they're going to be risking $1,000. On every trade, they're going to be risking $1,000. Now, if we actually maintain this risk reward, I don't want to go in depth into like, oh, should I maintain a specific hour? Because I don't really recommend maintaining a specific hour. If I have a trade, it is 4 hours. I told you guys I trade majority 5 hours. Sometimes if I have a trade, it's 4 hours. I can drag it up to 5 hours. But once I get to that 4 hours, if the market starts doing anyhow, like you don't tire to the pump, just like what you did yesterday, I closed immediately. I sensed that the momentum was dying. I closed ASAP, and it's still going to pump though. Still looking bullish. So don't trade at a specific hour. I've taught you guys how to target. Wherever your target level is, that's the average trade. Now, if your strategy is a high working one, stick to this template. You are going to take 10 trades. I'm going to risk $1,000 each. Now, you're not meant to take more than 4 trades in a day. You're not meant to take what? More than 4 trades in a day. Not more than 4 trades in a day. Not more than 4 trades in a day. Why is this? Because you don't want to actually get your daily drawdown. Because funny thing is that this $1,000, it may be higher than this. So when you start to trade, because obviously you're going to account for what swap fees, you're going to account for brokerage charges, you're going to account for commissions, you're going to account for a lot of other useless fees. You're going to account for that. So these I said not more than 4 trades, so that the remaining 1,000 can be a buffer. The remaining 1,000 that makes it get to 5K can be a buffer, can be like what helps you account for all these other rubbish fees. And you're going to realize that this trader, if he is able to take just 2 trades that are 4 hour only, he has won, or he has passed his phase 1. Why? Because 4 hour times 1,000 is 4,000, and you need 4,000 into 2 to pass your phase 1, which is 8,000, right? But now let's say you're not so sure about your strategy, and you want to take a more slow and sustained approach, which is what I do, right? What I do. A more slow and sustained approach. I don't take it for all my accounts. Do I have an account I risk 1%? This is called risking 1%. If you check it, it's 1%, obviously. So we are risking 1% of our 1% will be 10%. Shall we risking 1% of the accounts, of the total account, which is 100K. 1% of 100K is 1K. So, but now if you want to take the more slow and sustained approach, you're going to be dividing by what? 20 trades. And that's what I recommend that beginner starts with until you get the hang of it. Beginner starts with what? 20 trades. And we're going to have what? A risk of what? $500. And you're not meant to take more than what? More than. Guess. You're not meant to take more than 8 trades in a day, which is even too much. Don't even try it. It is even too much. Now you realize that this person would need to catch a 3-hour trade, which is 3 hours is one of the most easiest. In fact, it's one of the RR methods, that one of the risk reward trading method that has the most PR. By PR, I mean promotion. Everybody trades 3 hours. It's like 3 hours is like a sweet spot. Most big mentors advise 3 hours and all that. So if this person takes a 3-hour trade and he's able to like make up to 3 to 4 trades, he may have passed his account. Now let's calculate. 3 hours times 5 is 1,005. And you need 1,005 into how many places to have passed? Into 4 places makes it $6,000. So you need into like 5 to 6 places, right? Into like 5 to 6 places. Now note that this second person now has 20 trades to play with, but this person has 10 trades to play with. Now, if this person takes 10 trades and they are all losses, he has lost his account. Obviously, someone who claims that strategy is golden should not even take more than 10 losses. And the second person, if he takes 20 trades and he loses all 20 trades, he has lost his entire, he has breached his account. That's the word. And I know it may look impossible to take 20 trades and end up in a loss. Obviously, it may be impossible for some persons, because 20 trades is a lot. To me, it's very, very diabolic. If you take 20 trades and you lose all of them, please stop buying. Don't buy again. Don't buy again. Just work on your technical strategy, because justifying losing 20 trades, you don't know what you're doing. Now, but there are some common behaviors. Oh God, it's almost 10. Some common behaviors that can actually make you disorient this whole thing. And one of the things is basically your psychology. Psychology plays a very big role. I made a tweet the other day. I was like, once you've gotten the technical edge, please work on yourself. After you've worked on yourself, your trade psychology is something you need to cement properly. Because I had a problem with, whenever I was in profits, let's say I was in like 100K account, I was in like 104K, right? I started to risk maybe 2K because I saw a trade that was 3 hour and I wanted to just pass the account at a go. Because if I risk 2K on the 3 hour trade, that's 6K. 6K plus 4K that I have has already exceeded safe. So I found myself risking the amount that it would take me to pass the challenge with that specific trade. I would start ignoring all my plan. And now, let's say I see a trade that is 4 hour. I start calculating almost 108 minus 104 equals to what? Divided by the hour. How much do I risk? And when you start that, you're going to you're going to scatter your entire progress. It's not going to be so difficult for you to basically what? Track how much you've lost, what is really causing your drawdown, what is really causing your decline, and what is preventing you from scaling up faster. Because I noticed something. I was playing around with the trade yesterday. I did this because I wanted to show somebody something. So it was not yesterday though. 3 days ago, I brought an account from Drawdown. The account was at 45,500. I'm not joking. I still have the receipts. 45,500. So it just remaining $500 to lose the account. Fundedness had already breached the account. I messaged them, told them that it was just the account was at 9.61. 9.61 is not breached. And I have a trade which was floating on it in profit. And they unfreeze the accounts back. I said trading. I brought the account back from 9% back to 50,900. So literally I did 2% on the account. Now I was this amount, I did it with the plan of this 200 trades. So I was just taking $500 a day. I was making 5 out, 2.5. The account is coming back. I took 2.5, 2 trades. I think 2 trades, and the account came back to BE. And then one was floating 900. I closed it when I knew the market was going to fuck up. Now, I had that 900 and I saw a trade. And guess what? That trade, it was a phase 2 account though. That trade was basically a 3-hour trade. I told myself, if I risk this entire drawdown, this trade is too short. If I risk this entire profit where I don't manage make on top the accounts, which was the $900, with a 3-hour trade, I've passed the challenge once, and the trade was looking so sweet. I went to risk that 900, and boom, I was back again to square one. I saw on that trade, I was like, instead of wasting my time, this trade is too short. Let me risk 500. If I risk 500 times 5 hour was a 5-hour trade. 5 hours is going to give us 2.5, and I've passed the phase 2, and boom, I was down what? $500. This was a 50K account too. So $500 was basically 1% of it. And this was what I was doing until the accounts came to about 4,006. I was not afraid because of the accounts, anyways, because I can bring the account back. Obviously, the accounts came back. I traded Euro USD just before the market closed. So the account is back again in profit. So I was not afraid of the accounts being blown, but I was listening to basically show this guy how indiscipline can ruin everything for you. And that is one thing you need to actually approach prop firm trading with: discipline. You can be indisciplined. I tell people, play around with your broker. In fact, risk your entire portfolio. Go and sell all your lands in the village. Risk everything on that trade, on the broker. But when it comes to your prop firm, please make sure you're following a specific plan and do not alter that plan. Come rain, come shine. Even if you've seen a trade that has played 1 million times in front of your eyes, risk that same amount you would have risked if you are scared to take a trade. Risk that same amount you would have risked if you are scared to take a trade. And with this, some people call it 10 trade rule and 20 trade rule and give it names. But with these simple templates, you can basically you can be able to pass your prop firm challenge with ease if you know your capacity. So the first thing is knowing your capacity. And second thing is now drawing your plan out of this whole thing. How many trades do I take in a day? How many trades do I take in a week? And this whole thing, it also translates back to your live account, because another thing is a live account. It is one thing to pass a challenge. It is one thing to keep a live account to continually make profits for you. It is one thing to keep a live account to keep generating profit for you. That's even the most difficult part. People, then I used to deceive myself. Challenge account is not for my psychology. I need the live account. My account works best on a live. My psychology works best on a live account. Pick fooling, because if you can't trade the demo accounts, which is the challenge accounts, you will also do the same thing on a live account. The problem is your edge, and the problem is yourself. Two things: your edge and yourself. So stop deceiving yourself that if I get a live account, I'm going to actually make more. You get a live account and you will lose it. I have gotten live accounts so many times, and I have lost it without any profits. I'm telling you this, something you don't see outside. No, I have gotten a live account before, and I have lost it. Although they're not a lot, maybe just 2. It's not much, 2 or 3. But then that is the sad and the daunting reality of what trading prop firms. And the funny thing is that these prop firms are not rooting for you to win. If you have not heard it anywhere, hear it today. I'm going to let you in on something. I don't want to mention names because it may hurt the prop firm. But a prop firm contacted me, maybe any prop firm, but this is how all of them actually think. And they said they wanted me to come and be a tutor for them, right? To come and be a tutor for them on something. And I actually accepted. And so I charged them. We came up with a plan. I charged about $5,000 to teach for like 2 days or 3 days. They paid. So before they paid, they were like, please don't teach them what they would be able to use and become profitable. That was what he said. It was like, don't teach them what they are going to be. In fact, he said anything that will make them learn how to trade properly, don't teach them. We don't want that. And I was like, I said, okay. I told him, the person, don't worry, I understand. I have worked with a prop firm before. I know how these things work. So I've got you, obviously. And I did my job the way they want me to do it, and I left. And this is the thing. These prop firms, they don't want you to succeed. There are some funny things I've seen. Also, I'm seeing people trading their prop firms when there is a very major high impact news release. And then they are trying to close it. Imagine you're in a loss. You're in a loss on a trade and it is news. And you're trying to close your trade because you won't run out of the law. Are you stupid? Who do you think the prop firm will allow you? You would suffer in that loss. And when they will close it, you're not going to be able to recognize your accounts. And I keep telling people this constantly. If you don't have an already running trade, please don't trade during the news. Because these people will intentionally shut down their server. So their server is not going to be able to accept automatically close trade. There was a guy that told me that even the video evidence, I kept on laughing. I told him, if you want to take the video evidence and go and post it around the whole Twitter, nothing will happen. He took the video evidence, was like, boss, look at this. I'm trying to close the trade did not refuse. I told him, you know what you did to yourself. I cannot help you. You know what you did. Me, we get accounts. This is NFA, this is CPI. I respected myself. I closed the trade. As long as I don't have any trade running, I would not even trade. And then somebody went to trade and the very high news release, very high impact news release day. And he's trying to close the trade in profit. Are you silly? When the trade is going against you. So these prop firms will do everything for you to fail. No this and no peace. Your job is to what? Your job is to basically what? Defeat them with your discipline. Right? Defeat them with your discipline. If you have a rule that you say to yourself, oh, I don't want to trade during the news. Do not trade during news release. Nothing. Even if you see one of the best setups in the world, don't trade it. Don't trade it. Forex market is volatile. Even on days there are no news, you're going to see your trades play out fine. But if you have a trade already you're on, and because I always tell people, news does not affect the direction of the trade. So if you're on a trade that is running well and you're moving in the right direction, the news will only amplify the trade to go to your take profits ASAP. So prop firms will do everything against you. They will do everything in their power to make sure you fail. So you need to have that at the back of your mind. Jordan, when I saw a guy, he was like, Conde next made a mistake on the FAQ, and which made him not able to withdraw yesterday. So they should give him his profit today. I laughed. I'm like, you're going to wait for that 28 days. You never see anything. You never see anything. You wait for that 28 days. Next time, wake up and click withdraw by yourself. Right? So you need to have that at the back of your mind that these prop firms, they are also a company, right? They are basically running a profit company, and many of them are looking to venture into so many other things. But if you want to enjoy prop firms, approach prop firms with less greed. Approach prop firms with less greed. Prop firms are not a cash grab opportunity. You need to understand that they are not a cash grab opportunity. Approach them with less greed. Kill your greed. If on a 50K account, you make 1%, you make 2%, you make 3%, withdraw it, go again. Prop firms even praise people who are able to continually sustain. There's a guy that has kept a live account for two good years, withdraw it. And these are the kind of people that the prop firms will call. How are you? You don't believe these 2 good years he has not made more than 50K. There are some persons who want to get a prop firm and they want to make 100K in a day. I'm telling you the gospel truth, you will not make it. Even if you make that money, you will not be paid. Oh my God, you will not be paid. So please approach prop firms with less greed. I'm not saying that the prop firms don't have money to pay you. No, prop firms have money to pay you. But before you get that 100K you made in a day, it better where you make 20K this week, make 20K next week, make 20K the next week. It is better than when you make it, because before they give you that money, it better make it not give you. They will investigate and interrogate, and one wrong mistake in your interview, they'll tell you that it's not you that traded this money, that they can't give it to you. And that's it. So approach prop firms is like a sustainability approach. Okay, for this month, I'm targeting this percentage. This is what I want to make from my prop firm, or this is what I'm going to make from each of my accounts, and I receive payouts. Then I was making like 4 to 5 payouts every week because I have multiple accounts. And then funny, many persons are like, he's withdrawing just 2K, 3K. I laughed at them. I'm like, those 3K, 4K, 2K, 3K. If I show you the total, and literally, that's just how it is. But there are some persons who want to come and make what somebody has made in a full year in one trade, and ASAP you're getting banned. And you're not getting banned. You're not just getting banned alone. You're not getting that payout. And these prop firms, they know each other. They know each other. So if you enter a blacklist, you're most likely going to enter the next one's blacklist. So these things I'm telling you are things that you're not going to hear everywhere. You're not going to hear them everywhere because these prop firms are running a business organization, and it is their own priority to keep their business afloat. You can't come and sink it for them. Right? You can't come and sink it for them. So please, I need you guys to, although I'm going to send one. I did that one since last year. Last 2 years. I called it prop firm 30K template. Those who want to actually make 30K in a year using a 6K Stellar account as the starting this. And I'm going to still send it for you guys, but this video is you guys' own video. So you can go through over it whenever you want. So, but then I'm going to give you an assignment. Make sure if you have a prop firm account and if you want to actually venture into prop firms, you need the starting capital, number one. It needs to be averagely good, and then you need to have a plan. It is that plan. I have laid the bedrock for you. Go and build your own plan, right? Build your plan. You can share it with us on the groups, on the Hangout group. If your friends see it and they like it, they'll be able to copy and replicate, right? If I see it and it looks good, I would also tell you it does. So build your plan and follow it judiciously. It can be difficult, but it's a challenge. And I'm not saying follow it follow it specifically for your prop firm. You can trade like an animal on your broker, but follow that rule specifically for your prop firm. You get specifically for your prop firm. You can trade anyhow you like on NextNext. You can trade anyhow you like on Hot Forex. You can trade anyhow you like on Capital.com. You can trade anyhow you like on OctaFS. For the next broker is coming out soon. I'm going to be number one affiliates. I will also bring, if I find out that their features, obvious, the foreigners have very great spreads. So I find out that they translated the whole thing to their broker, and their broker is mad. I also bring it for you guys. You can also trade there like a fool. And obviously, one of the best things with trading with a prop firm, a new broker, they give bonuses, mad bonuses. They can be able to give you 1,000% of a deposit, but you're not going to withdraw it too. You trade, make money, and then withdraw. Just like there was time that I got a deal from one, I think MXCS, one crazy ass exchange like that, and he gave me what they call trial funds. You know what trial funds are? Trial funds are money they give you a demo. We can't withdraw it. It's just like they're giving somebody live accounts. You make money, and wherever is the profit, you withdraw 100% of it. So they gave me 5K trial funds. It was the BD that later came and told me to close the trade, because the trade was already running like 10K profit. So, but after a while, those trial funds, I just stopped collecting it, because I was not just in to promote the exchange. I was just taking their trial funds, mounting 125x on it on BTC, and I was making money. And at the end of the day, I was not promoting them. So Just because of the whole dynamic, I stopped collecting it. So because I don't have the strength to promote. So, but then trade anyhow you like on your broker. But when it comes to your prop firm, please just maintain a specific rule. Do not change your risk. Even on your winning days. In fact, on your winning days are the days you're supposed to even be more cautious, because that's one of the days you're tempted to go against your rule. Your winning days. On your losing days, you will be more scared, right? It applies to losing days too. On your losing days, you'll be scared to go below your risk because you don't want to lose your account. But you're making a terrible mistake by doing that, right? So on both your losing and your winning days, make sure you maintain the same risk. If you blow the account span, you move again. Although it's going to be so despicably shameless that you blow your account with just by violating the daily drawdown rule. If you must blow your account, blow it with the total drawdown. I don't want to hear that you blew it with daily drawdown, because that's it's so shameful. It means you're not even careful at all, right? So that will be it for today. If there are questions, you guys can ask before we call it a close. It's already 10 o'clock. I spoke for approximately 56 minutes. So if there are questions, just raise your hands so that we can attend to them. You know how we do it. I'll just unmute, and then whoever speaks first gets to ask first. The rest just mute back. Just be sure if I unmute you, you'll be able to ask your question. Ask it here, or you drop it on the group here on your own.
Good evening, sir. Techriz.
Yeah, what's up?
I'm fine. How's your day?
I'm good. My day has been well, thank you.
Okay, my question is about these what's it called, daily buyers.
Okay.
Like now, it's Monday. So what is the first thing you open your chart? What's the first thing you look for?
Okay, I just like you saw me open the Euro JPY chart, and the first thing I said was that it's bearish. So the first thing you need to do is to recognize where the market is headed. And after that, the next thing you need to do is find your point of interest. It's as simple as that. Then, after that, you need to now do what? Refine if you want, or find entry opportunities. By entry opportunities, I don't mean POI again. I mean when you're able to enter that trade. Would you want to wait till it gets to the entry? Or do you want to wait when it takes out the entry and starts dropping or starts giving you sign, then you jump on it? So you have to decide. So you need to first understand where the market is going. You know, pass like that. There's no magic. I don't come to the channel and start doing magic. I first look at the structure from the H4. Whatever it shows me is whatever I do. So, yeah.
Okay, thank you, sir.
Good evening, sir.
Yeah, evening also.
Good evening, sir.
Evening, I can hear you.
So my question is concerning the class that we see that so the class are still hold the crypto advanced class. I mean the class that we see that the class still hold the crypto advanced class.
The class will still hold. We spoke about that yesterday on the group.
Okay, sir, no problem. Thank you.
Good evening,
Yeah.
sir. Good evening, sir.
Yeah, evening also.
I'm fine, sir. So my question is about the daily trade, like how each prop firm you need to trade like a minimum of 5 days for funded now.
Yeah.
Is it that you follow it accordingly, like you trade on Monday, even if you don't want to trade? Let's say if you're a trader that don't trade every day, is it that you have to follow it by opening a position with a micro lot size, that kind 0.01, or you can skip a day and trade the next day?
Okay, the rule. Okay, I got you right. The rule did not say minimum consecutive days. It says just minimum days. So if you trade Monday and then you did not trade until Wednesday, if you trade on Wednesday, it counts as 2. If you trade on Friday, it counts as 3. So whenever you just execute a trade on a fresh new day, it counts as 1. So they did not tell you make sure you trade Monday, Tuesday, Wednesday, Thursday, Friday. No. Anything you trade. So let's say I'm able to trade in 3 weeks and I pass my in 3 weeks. Obviously, I must have traded more than 5 times. But The rule is there just so that people who pass their challenge in one day cannot be able to make it to the next phase. So you have to keep on. The tip I give you guys is just basically if you're able to pass your challenge in a day, you can just open micro lot trades for the following days until you get to the 5th day. Then you request your next challenge. That's simple. It doesn't apply to live funding, just challenge.
Okay, sir.
Mm-hmm. Yeah, evening Caplot, what's up?
So I want to ask you, like, what do you think or what do you like feel about trading one pair or trading multiple pairs?
Okay, trading one pair, trading multiple pairs. Okay, so trading one pair has its advantages, right? It helps you be able to understand the markets down to the green level, down to a point where you call mastery, right? But then those who actually trade multiple pairs, they don't actually trade based on the intrinsic nature of a chart. By that I mean, who be this? Okay, sorry guys. So by that I mean, let's say now I am a trader and I trade majorly Euro USD. If I've traded it for 3 to 4 months, there is a level of precision that I will be able to have conquered that somebody who actually is trading just because he's trading patterns will not be able to understand. There are some recognizable patterns that I can see a candle, I'm like, I don't see this candle before. Somebody who does not trade it will not be able to see that candle. If you even try to explain to him, he doesn't even know. But there will be some unique type of patterns that the pair will form. Only you who have mastered it down to the green level can be able to take it. Now, those persons who actually trade multiple pairs, there is also its advantages too, right? There also its advantages too. You're going to be able to be open to more opportunities, right? You'll be able to be open to more opportunities. I'm trying to find something because I read a very, very good article on that online, and it was enlightening. Let me get this guy's page. Trying to get something so I can read it for you guys. The benefit, I don't want to ask ChatGPT, but the guy really gave a very good description of what I want to explain. The benefits of trading multiple pairs. And me, I just like to, my answer to this is don't trade one, don't trade multiple. Just have focus on a few 3, 4, right? Few 3, 4, and you're good to go. So let me read this out aloud for you guys. Let me read it out aloud. Who is sharing his screen? Who is that? Who is that person? Okay, so now he said, because LTP said there are the benefits of okay, he said when you advise people to focus on a single pair, most of them feel like you're only limiting them to making more money. They will be like, why would I be trading only one pair when I can trade that pairs and make more money? Now my question is, since you'll be trading all those pairs, how much have you made? Less is more. Start from reducing the number of your pairs on your watch list. Like I said, patience is your problem, and it's crazy to know your problem and not find solutions to it. I haven't missed any major expansion on Euro USD. Now note the word expansion. It has not missed any major expansion on Euro USD since 2023. And this is because he's able to recognize these candles that bring about the expansions because he has been trading it for a very, very long time. 2023 is one heck of a time to trade just one pair. I had a conversation with this guy too on IG, and it was enlightening. But then now look at the response from someone who actually trades multiple pairs. Now he said, I completely respect your perspective, and I agree that focusing on one pair can incredibly be effective for certain traders, especially for those who specialize deeply and develop a refined understanding of a single market. However, I think the number of pairs a trader focuses on is subjective and depends on their mindset, education, and overall approach to the markets. Personally, as a swing trader, nothing to note, swing trader, I take more diversified approach. I trade over 100 pairs And my strategy isn't about mastering one pair. And that's into notes. My strategy isn't about mastering one pair. My strategy is about mastering price action, which applies universally across all markets. The way I approach one pair is the same way I approach the rest. My focus is on understanding structures, patterns. Another thing to note, my focus is on understanding structure, patterns, and behaviors that repeat across different pairs. While I admire the precision that comes with focusing on one, I find the diversification across multiple pairs often. Now, I took a trade on XAUSD and I used the approach I used for currencies on XAUSD. And Trayon took the screenshot of the trade and told me, Tech, don't do this again on XAUSD. XAUSD doesn't work like this. I was like, tell me something. And he was able to break it down for me down to the micro level, because this is somebody who has been trading XAUSD for a hell lot of time. So he knows better than I do, right? So now this is the advantages he gives for trading multiple pairs. Number one, more opportunities. I don't have to wait for one pair to present a setup. I can find high probability trades every single way. Number two, reduce risk. By diversifying, I am less exposed to volatility or unexpected moves in one market. By that, he means that he has risked $200 on Euro USD, $200 on GP USD, $200 on Euro JPY, $200 on GP JPY, 4 pairs now. If there is a stupid price action on Euro USD, he has completely eliminated himself from that particular shackles. Imagine he had been all in on Euro USD. It means he's done trading for the day, am I right? But because he has diversified his portfolio into 3 different markets, he's still making money upon the rubbish that just happened on the Euro USD. And now this is where those persons who actually master one pair are actually at a disadvantage. So each of them have the disadvantages and the advantages. Now we say the third one is consistency. The market behaves differently at different times, and having multiple pairs allow me to adapt to varying conditions. I believe success in trading is about how many pairs. Okay, I believe success in trading is less about how many pairs you trade and more about your discipline. Very, very good points. Proper risk management and your ability to execute consistently. At the end of the day, both strategies can work. It's about how you align with your personality and your trading goals. So he has said it all. It just basically depends on you, yourself, and yourself alone. If you find trading multiple pairs distracting, reduce it to a minimum. Like I said, I don't recommend one. I don't recommend multiple. Just be at a level where you can actually be able to effectively and efficiently manage a few. I had so many pairs before because I was teaching a lot. So I needed multiple pairs to be able to show you some different market behaviors. But then when I want to trade and make money for myself, you'll find me coming out with more of some pairs that are very unique or some pairs that are very similar, right? You can see Euro USD, Euro JPY, GP USD, GP JPY, USD CAD, some of these pairs, right? So I don't recommend one, I don't recommend multiple. Just be at a level where you can be able to cope without so much pressure on you. So I believe that has answered your question.
Yes, sir. Thank you.
Okay. Do we have more questions? I need to leave by 10:30.
Yeah, good evening, sir.
Good evening, what's up?
Yes, I'm fine, sir. Sir, I just want to ask, what was the max allocation of prop that you can have as a normal trader or as a day trader?
All right.
Max allocation.
All right. Okay. So I'm meeting some more persons. So if you see yourself unmuted, just know you're next in line to talk when you get the opportunity to speak first. So the max allocation differs on different prop firms, right? Now on Funded Next, you can only go a max of 300K. Now, what are the available challenges they have? The max challenge they have is 200K. So you can only purchase a 200K at once, right? So on Funded Next, you can go a max of 300K and that's all. Now, if you purchase a 200K account and a 100K account and you pass the both of them, or you pass 200K first and you pass 100K first, and you have them at break-even, means you've not taken any trade on any of the accounts, they're still brand new. Do you know you can request for them to merge the accounts together and they'll merge it, and you're going to be able to see a brand new 300K live account. But then I don't recommend this because you can be silly on some days and you lose the account. And you know, that's the reason why they say don't put all your eggs in one basket. So I recommend, instead of having all these accounts joined together, you can have 100K into 3, 100, 100, 100. So even if you have a bad week on one account, there are other accounts that are still there to help you stay afloat. On a FTMO, the max funding is 400K, and the max account you can buy is 200K. So if you have a 200K account too, you've max funded on FTMO. And you can also join these accounts together to give you 400K, just like on Funded Next. Or you can even split it to become 100K into 4. On Funding Pips, the max funded is 300K. I'm just mentioning these 3 major prop firms. FTMO and Funded Next has what? MT5 available. Funding Pips doesn't have MT5. It doesn't have MetaTrader, just some weird platforms. So Funding Pips is 300K. And the max account you can buy is 100K. I think, yeah, they don't have any 200K accounts. So you can buy 200, 100, 100K to 3. And you can be able to match them to make 300K, but I don't recommend it again. And now, Funding Pips is a prop firm that does not accept swing traders. So if you swing, please don't go to Funding Pips. Do you know on Funding Pips, if you hold your trades to the next day, you've breached the account. Maybe you're hearing it for the first time, but yes, they only accept day traders, people who take trades in a day and close that day. If you put the trades in the next day, you're in trouble, you've lost the account. So these are the 3 major firms that are currently popping up, and these are the max funding. Some of them offer higher than this, so but you can't get better than these 3. You get, that's what I just mean. So yeah. So in total, you see that if you're max funded on 3 of them, you're up $1 million.
Okay, thank you, sir. So like what's like an achievable target you can have on a funded account? Like let's say weekly or monthly. Just like a percent you can have.
Okay. Now on Funded Next, if you actually make 5% on your live account, your first 5%, even if it doesn't come at once, let's say you make 3% of the first payout, and the second payout you make 2%, making it up to 5. They're going to give you 15% of a challenge phase profits, right? Now, but I don't have any specific recommendation for like a target, because I feel like it differs according to an individual. If $1,000 is too small for you, it just simply means that percentage that will give you $1,000 is too small. You need to up it. But you're going to see some persons who $1,000 is enough, and on a 100K account, $1,000 is just 1%. So if you can be able to do 1%, you take your payout and you're on your way, right? But what I do then is that once it's a 100K account, once I've gotten to 4%, I'm okay. 4-5% above is fine, right? Because I have multiple accounts, I can still do the same thing over and over. So 4-5% is okay. But then if you're trading and you've seen the money you've not seen before, close it and withdraw. Reward yourself and then aim higher. Now you have seen, if you see 1,000 today, tomorrow you want to see 2,000. Next tomorrow you want to see 3,000. It's all about progressive efforts. You can't get there in one night, right? So just keep doing it gradually. And you're going to get to a stage where you tell yourself, oh, I must make 10% before I withdraw. Still not sustainable though. No more. You see the least 2K, run with it, because the market can be crazy sometimes. So, but yeah, 4-5% works. If you can do it, it works.
Okay. Thank you, sir.
Yeah. What's up? Who is speaking?
Sorry, please. I have a very personal problem.
Okay.
So my problem is I open up the chat when I'm studying, I understand what I'm doing. And then I work very well during the testing. But once I open up the live chat to trade, I'm confused.
Okay.
Like I don't even know what I'm doing in the market again. I'll just look at the chat and I'm paralyzed.
Why is that?
So I don't know. Like when I open up the chats, the live like a live chat, I'm just confused. I don't even know what to do, where to place my trade, and I end up taking losses.
Are you serious?
Yes, sir.
Okay, there is this method that has been proven to work for a lot of persons, and that is is something that can help you boost your memory too. Photographic, focusing on the targets, but then do you have notes? Have you ever drawn an order block before on a note?
Yes, sir.
Are you sure?
Yes, sir.
Have you ever drawn the market structure before on a note?
Yes, sir. After studying the videos you sent us, I drew them.
Yes,
All those.
exactly. How many times have you gone back to them?
So just once or twice.
Okay. Now, you know that I have the picture of, oh God, I have the picture of the candlesticks I used on my wall. Have you ever seen the picture of my trading station before? You will see on the side there's a picture on the wall. I had to print it. Why? Because I have understood that when the more you look at something, the more it registers in your head, right? So the more I stare at it, the more if I'm seeing something that looks like it, I refer back to the picture and then boom, I can say, okay, these two things look alike, and then that's my trade, right? When you actually work with photos, you tend to remember more. There's no magic. And the truth is that if this particular thing has once happened to me, and there is no better way to conquer it than always showing up in the market. At some point, it's going to get easy for you. There's no deliverance or anything I'm going to do that will make it automatically start getting easy for you. Just keep showing up. If it helps, go back to the courses again. As you're going back, take strategic notes. Use a color pen, get a red and a green pen, draw, write notes. Whenever you see those things in a market that is about to play out or in a market that has played out, if you look back at those pictures you've drawn, you'll be able to trace the similarities between them. And then these things slowly, you don't even know how it happens. It just slowly starts to come to you until at some point, boom, you start to do without it, right? So, it's just that you're still starting. Obviously, it happens to everybody. You're still starting. So just keep forward test. You can even stop trading, just between paper trading. That's do normal trial accounts, demo, whatever. Paper trading. And this time around forward test. Because if you watch the video on back testing, I said after you've back tested, start forward testing. Now, forward testing is basically what trading markets that are coming out new, right? So start forward testing. And since you're still learning, start from a much higher time frame that will not disturb you so much. 30 minutes, 45 minutes, 1 hour max. Right? So just keep trading. It's gonna get easier. It's not magic. It's gonna get easier. So but now you're still learning. Don't do and start risking your money, your real money on those learning opportunities. No. So yeah. And please get a book and be serious with the annotations. It's gonna help you a lot. It's gonna help you a lot.
Thank you very much, sir.
Yeah.
Good evening, sir.
Good evening, sir.
Good evening.
Yeah.
Okay, only one came around. Who is speaking?
Just yeah.
Okay.
I want to ask.
All right.
I want to ask, do you recommend trading phase one account like only one
Yes,
selling
one
one?
step. Yes. One step helps you go faster, but you know the con means the disadvantage is that the one step the drawdown is smaller. Hope you know that. But one step helps you go faster. If you can take trades and pass your account sharp, take the one step. It's the quickest route to getting funded. But just know that it comes with like a con, and that con is your drawdown is small as compared to the two step where you have opportunities to trade and lose more. But in one step, you're not going to be able to lose so much. So yeah.
Does the drawdown applies to the live funded?
Yes, that's the thing. That's one thing. It's a one-step account. It applies to the live funded. So whatever, if you see, I think on fundedness, for example, now the daily drawdown is 3%, that'll be 4%, right? And the total drawdown is I think 6%. So you can see it's small, and it also applies on your live account as well. So that's why I just stick to phase 2. Although phase 2 can be a pain in the ass because passing through challenges is not easy at all. It's not easy one bit. So yeah. But where a one-step account will favor is if you're trading a very huge account like 100K, 200K, you may not really feel the drawdown so much. But when you're trading accounts like 6K, 10K, it's going to really be a problem for you. Yeah, so that's it.
So good evening, sir.
Yeah, evening, Emperor. What's up?
Yeah. Actually, what the other guy said about himself, I have an issue throughout this week whereby most of my trade which I took personally, some of it left me out
I mean, I hit SL, then went to my way, while some was total loss. And also, I decided to change my strategy to probably follow some analysis I saw on Twitter, I saw from other groups. Those analyses I took, they went to losses just to recover though. Then I had to stop. So when I stopped was on Friday. So I was actually thinking probably I should take a week break, or should I hold on, or should I use the weekend to practice, do some stuff, do some training again, then go for that in the new week, because I was overwhelmed about what really happened. I was like, if I took someone else's trade, it would go to SL. If I took mine, it would go to SL. How can I move on with that, sir? Though it is this week that this happened.
Okay, this week.
Yeah.
All right. So, I don't recommend. Would I say I don't want to recommend break, but then if it affects your psychology so much where it starts to affect your behavior, just then I can recommend a break. But then for now, the only thing you can do is, because after taking that break, you're going to still come back to that same issue. So it's best to face that issue head on and conquer it. So what you need to do is stop deleting your trades after you've taken a loss. Keep those trades. Keep them. Don't delete them. You can, if even better, take a screenshot of them, or wait till when price plays out from wherever it plays out, and then take a screenshot. Now ask yourself, why did price play out from there? Is it something that you will be able to recognize? If it's something that you can recognize, then the problem is you, right? Not the market. But then I think there's something I didn't teach you guys. I've just remembered. Did I teach you reclaim block? I don't think. But then, if I didn't teach you reclaim block,
no, you didn't take us. But I think Sabigel talked about it in yesterday's class.
Yes.
So I need to check your own.
Yeah.
I need to check your own about the reclaim block.
Okay, the reclaim block. Yeah, no problem. So the reclaim block is something that sometimes you can have a trade, and market just decide to weak out everybody on that trade. But that trade is still gonna go well, though. That was why I used to trade USD card the other day, and I made like about 4K from it. Reclaim block, it was too simple. The price would just decide to take everybody out of that trade intentionally, and then to come back again. Now, those persons who are already giving up on that bias would leave it and be like, let me just go. But the market will come back again and then trigger that other block again and then go your way. You get? So that is a reclaim block. So sometimes it happens to you where price will take you out and then starts going your way. Why did you leave? Why did you run away when price takes you? Well, any trade that would play out would tap your entry and move. Any trade that takes you out and come back again to that entry, trust me, buyers are still in charge. Let's say it's a buy trade and it took your SL out and it starts coming back up again. Buyers are still in control, because the trade that wants to sell will sell streets. Did you get? So some of these things supposed to be recognizing it, some of these things recognize it. So, but I don't recommend breaks. Find out why those things happen to you. Study tonight and find out why. Check those places check those things, those decisions you made. Are you happy with them? Are there places where you truly believe that price was supposed to react from based on what you have been taught and all that? Then just tell yourself the honest truth. And if no, you're not proud of your decisions, just make amends, take notes. Obviously, take notes. Always take notes. So, yeah.
So, actually, this is what I usually do. Whatever trade I want to take, I take a screenshot. I have a WhatsApp group, which I created for myself. I added my second WhatsApp account. So, those trades, I will just screenshot them. I'll post it there. So, sometimes if it's SL, I'll just put a star mark or probably reference it that it goes well or it's SL. So, but I rarely go back to check them how they plays out or to reference them to check what I saw. But sometimes whenever I go back again to check some of those trades, I'll be like, why did I even take this trade? This trade doesn't even look as if it will play out. But probably I would now look at it from another references again. Probably I was looking at the lower time frame, or probably I was looking from the higher time frame, but stuff like that. But then I would try and work it out again before Monday.
All right, no problem.
And another thing I did is, sorry about that, sir. Another thing I did is I was actually using 1% to trade before, because I bought 2 brand new accounts last week. Then I decided to take those accounts 1% per trade. But when I noticed those losses, I reduced it to 0.5%, and that still keep my account active. So I haven't do the account, but then I was in a let me say about -4% drawdown.
Yeah, good. That's one of the best things to do too. When you're actually on a verge of losing your accounts and you still want to keep the account safe, like you're so sure that some trades will take your accounts back up, you can even just do by just reducing your risk. If I just be going between these two risks, 1%, 0.5%, 0.5% will help you on days where you're not so sure of your trades, right? On days where you're not so sure of your trades. But then on days where you're too sure, but in fact, just stick to one. And one of the best things I recommend that beginners stick to is 0.5. Don't go to 1% until you have established some level of dominance in that particular skill. Just stick to 0.5. I know it can be slow. But just stick to it. You're not going to regret it, because when you take losses, you're going to be more relaxed because your account is still jiggy, right? Your account is still there, and your account can keep you going until plenty more trades. So just stick to 0.5 next time. Yeah.
Thanks so much, sir.
You're welcome.
Sir, so is it like advisable for you to like trade your multiple accounts at once, or you like take them each time? Like, yeah.
No, don't trade them at the same time, because what affects one will affect all. So just make sure you take, like, if you have and also, like I said, don't put your eggs in one basket. So I have challenges from like these three firms. So if I have 100Ks multiples on them, I take one on my funded next, I take one on my FTMO, and I take one on my funding pips. Now, this is just one account out of multiple accounts I have with them, right? So even if there is a bad week or there's a bad day, it doesn't affect every single account. But you see people that use a trade connect. There's what you call trade connect, where you can connect all your accounts at once. Once you click buy, that trade connect automatically risk the amount you want it to risk across all accounts. So if you have like a 100K account, instead of going to Nash Markets and start calculating 0.5% loss, the EA does it for you straight up and places a trade for you across every single firm. So something like that is not recommended, because, like I said, once it affects one, it affects everything. And once you've lost all, you've just brought yourself back to ground zero. So if you have like 2-3 accounts, please just trade one at a time. That was what I was doing then. If I trade one, once I get to profits, I abandon that one. I pick up the next, get to profit. But that's why sometimes I can have like 4 payouts in a week. Because I'll trade one in a day, make 2K, I drop it. Take the next one, make 3K, I drop it. Just like that. And you can have lots of payouts in a day. So just one at a time. Don't split your focus, so that what affects one will not affect all. I know some persons will be like, but if I now win on one, I'll win on all. It's your problem. When the bad days come, you know what to tell yourself.
Okay, so thank you.
Yeah.
Good evening, sir. Good evening, sir. Yeah.
Good evening.
So I wanted to ask, is it possible for someone to buy a Stellar account and probably trade it on your own pace? Maybe I want to trade today, I don't want to trade tomorrow.
Okay.
Maybe I didn't see my setup within the week. Will it affect the account?
Okay. No, because Fundedness doesn't have a consistency rule. Although there's an account you can buy and there's consistency rule on it. You know what consistency rule is? You must trade obviously. So Fundedness has an account type that has consistency, but Stellar accounts are free from everything consistency. So you can trade any day you like, anytime you like. There's no restrictions to how many lots you use, when you trade, and all of that. You can even trade when there's news, although I don't advise it. So yes, you can trade the way you like, as long as it's Stellar account. Stellar, not other types.
Yes, sir. Thank you so much.
Yeah.
Good evening, Techriz.
Good evening.
Please, can you help us open the synthetic group chat? Because I think Sabi girl said that she would like to check some of the things she has been teaching us and all of that. Because I think that's the only way she can see, okay, this is what she has been teaching us, and truly we are grasping it.
Okay.
I don't think there's any other means. Maybe not for question, but at least just for us to show her that, okay, yeah, we are really getting what she's teaching us. Thank you.
Okay. All right, no problem. I'm going to open it. Well, I sent the screenshots in the morning where I asked her and she said no, keep it closed. How many of you saw it? I dropped the screenshots in the morning. I asked her, and she said
I
no,
saw
keep
it,
it.
sir.
I don't
I saw it,
know.
sir.
Anyways, I will still ask her again. If she says open it, but not for questions, I will open it. Because it's the questions she's really not into. She prefers answering the questions on the live class than dropping a lot for her on the So, but if it's just to show her your progress and what you've been learning, I would open the group. No problem.
Sir, I want to ask,
Have you not asked before?
is breaker block the same thing with the reclaim block?
Mitigation block.
No. I mean, it's a breaker block entry. I heard
No,
about.
it's not the same thing as reclaim block. Reclaim block, mitigation block, breaker blocks are not the same thing. But mitigation blocks and breaker block, they are similar because they have the same criteria that makes them work, which is the expansion. But reclaim block, it works with other blocks, not breaker blocks.
Okay.
Yeah.
Hello, Techriz. Good evening.
Yeah, evening. What's up?
Yeah, I'm good. So I think my question is with respect to the strategy as to trading single phase accounts. You spoke extensively on trading a two-phase account, right?
Yeah.
So I don't know if it's possible for one to adopt that same strategy for trading a single phase account. Yeah, thank you.
Okay. All right. So the only difference between the both of them is just to be able to identify what your daily drawdown and your total drawdown is. A one-step account, they sell it for a cheap price. Why? Because it has a limited drawdown and it has just one target. So once you hit that one target, you're moving on to the next. And the target is always much. The target is like 10%. Right. So once you hit that target, you're moving on to the next phase. Not next phase. You're moving on to straight up live funding. So, but the drawdown is limited. So this time around, you cannot be able to take the number of trades that someone who has a two-step account can be able to take. Now, if you are saying there's a firm now, I don't know if firm will, Fundindex has 4% daily drawdown, right? Which is 1% less than the two fees. Now, 4% is okay, right? And then it has a total drawdown of 8%. Now, 4% is 4K, right? You're not meant to lose 4K in a day. So you can see that person would no longer be dividing his total drawdown by, the person will no longer be risking the amounts the person who is trading in one step will be risking. So we now have 8%, right? We have 8% as our total drawdown, which is 8K. Now, if you divide 8K by 20, you're going to find out that the person's risk will now be lower if you want to still take the same trades. But if you want to actually take that exact same risk of $500, you're not going to take up to 20 trades and you've blown the account. Hope you know that. You take just, I think, 16 trades and you've blown the account. So the only difference is just the drawdown. That's all. Every other thing remains the same. So whoever is trading a one-step account should just use his drawdown and then use the template I have given. Fix everything in where it's supposed to be, and you should be on your way. Nothing more.
All right, that's fine. Thank you.
Good evening.
Please, I want to remind you, boss, please. We need your help on journaling, please. Journaling, I mean.
Okay, journaling, no problem. I can bring somebody to actually teach that. Can bring somebody to teach that. I'm not a big fan of journaling. I think I just paid for Techriz today. I want to see how, because I prefer automatic journaling. I don't prefer after every day to go to your journal and then click, I have made this, I made that. No. I paid for Techriz, I think $300 today for a yearly plan. It's going to automatically track my trades across every single account I have. And it's going to be able to bring out my metrics, statistics, and everything for me. So I don't need to start going to go and click this like that. You can also give it a try if you have the money. Although I've not really tested it. So if I test it and I find out that it's good, I would also bring it up for you guys. I also heard it has lots of great features too. But then you can also journal for free on Notion. I have somebody who does that. I'll see if I can bring him at the end of the whole class to teach you guys that, how to journal. Brooks too journals on Notion. So he's going to also be able to teach you guys how he journals as well. But for people like me who have traded for a very long time. I don't journal again. Journaling is for beginners, right? And I recommend that everybody journals, right? So yes, we would schedule that. Would schedule that.
Good evening, Techriz.
Good evening. What's up?
Yeah, I'm okay. I have a question.
Okay.
This thing about spread, sorry, is a little bit different from what we're talking about. How do brokers use spread? How do they use it to the disadvantage of the trader? And spread in general, how does it work?
Okay, the whole spread of a thing is just basically it's caused by the difference between the bid and the ask. Now, if there's a spread of like 2 pips, right, very close to your entry, it just simply means that your entry may not be able to be triggered if price gets to that level. Because why? The spread has pushed your entries backward a bit. And the same thing happens when you hit SL. If you hit SL, your trade will not be able to trigger at that exact zone. It's going to now trigger at a zone you did not expect. That's why sometimes you can risk $500 and come back and see that you have been charged $550. Have you ever experienced that before? That one is spread. Now, spread is far different from slippage because slippage does no harm. Slippage just simply means that in that whole area, there is no bid or no ask for that price you're requesting. And so what will price? The price will look for the nearest place you can afford to get that. And this happens when there is high volatility anyways. Spreads and slippage tend to heighten. Now, slippage is severe because sometimes you can see double of the risk you've intended to risk. So if you wanted to risk $500, if a slippage happens, you may be seeing $1,000 loss on your account. This is because during high volatile periods, some of these brokers tend to act out, and then when there's a very big gap, which is a very big spread between your bid or your ask, price is going to trigger it wherever it likes or close to the nearest one. So, but spreads doesn't do so much at all to your trades. That's why sometimes people be like, add spreads to your trade, depending on the type of broker you use. But I think brokers are becoming smart these days. Fundiness broker is near 0 spreads. XNet has a broker that offers 0 spreads too. But then on standard accounts where you can have spreads as low as 5 pip spread, 3 pip spread, they advise people that instead of like, let's say your entry is at 1.30000, make it 5 pips above that so that you'll be able to get get into the trade, even if there is a 5 pip spread, because you've already accounted for that. You get that missing out on the trade entirely. So it's just you shouldn't even be bothered about spread. What you should be bothered about is slippage. Spread doesn't do so much harm. But if you're not careful, to spreads can make you miss opportunities, because you have times where price will clearly enter into your entry. You would see it from the MT5 that has dipped into your entry, but your trade will not be picked. Right? Your trade will not be picked because the spread is much higher than what you have set it to. Spread is much farther than that. So it's just broker terminology. It will not affect you so much if you use a very good broker at all. I've never experienced a problem with spread before. I don't know why. So people say it is just so alien to me.
It doesn't fluctuate.
It doesn't fluctuate so much. Maybe because I don't trade on those high volatile times, probably. But I've never really been affected by spreads before at all. But I've been affected by slippage a lot. Because there was a time I took a trade, I risked about 3K. The broker took out 8K from my account. And I wanted to kill myself that night. Because it was on AUDNZD. And the trade was so bizarre. And then the excuse they could give me was that Kenny put up with one big ass document of excuse. I just had to forgo that one and moved on.
So how do you identify the slippage?
You can't identify it, you can't do anything about that one. But the spreads you can, because on the MT5 it shows you, right? And obviously I have a 0 spread account. I use XNet 0. So yeah, if I'm trading with XNet 0 or any broker at all that I want to use, I just go for the 0 spread option. But the slippage is something you can't identify it. It just happens when it wants to happen. Some brokers, like I think Funded Next, they may be lenient enough to remove the excess that was taken by the slippage and give you the rest. Do you get? But some of them will plainly just give you one document of SPs and tell you to be on your way.
Thank you.
Hello, Techriz.
Yeah, also.
I saw this Psychedelia post today on Twitter.
Yeah?
So I said I saw this Psychedelia post on Twitter. So when I saw the image that he posted, I thought it was a breaker block. So, but I saw your comment that you said it was like the clone block center that is 90% short, as in something like that. So I was confused at first, but because that's a breaker block, if we investigate our entry, we see a candle body, not which.
I know it's not a breaker block. I wonder what you're seeing. That was not a breaker block.
Good evening, Techriz.
Okay.
Good evening.
Okay,
Yeah, what's up?
So in the Hangout group, I saw you told us that those who are yet to get a breakthrough should just wait for Brooks. And I was just wondering to myself, how different will it be, the technical class from what you taught in Forex?
Who is speaking? Okay, it trades a more refined approach of the market. It's the algo concept. I didn't want to teach it. I can teach it, but then it will be like a clash of information. So when you get there, you understand. There are a lot of things I would have taught you guys, but I just kept it for him to teach. Manipulated setups, fake break of structures, a whole lot. So when you get there, you learn all of those.
Okay, thank you.
Yeah.
Oh, thank you. If you can allow me to run before time, will we have live classes every day with Brooks?
Okay, I don't know if you're on the group, but I actually explained this. Now, he said how the class is going to run. It's live classes, it's not recorded videos. He said on the first day, let's say we have a class today, he's going to do illustration. Illustration is with all these iPad and all that. Then after illustration, the next day is a chart analysis. After the chart analysis, you have a day break. Then you go back the next day, illustration. After illustration, chart. So that's why the class is very long. It's like 2 months. You get so it's going to be all live classes. There's no recorded videos, and he uses Google Meets. So I think that the platform is clearer.
Oh, thank you.
So, yeah.
Good evening, Techriz.
Evening. What's up?
I'm fine, sir. Please, my question is, how do I overcome my fear when it comes to trading? Because I observe it's one of my points. After making analysis and it's correct, but when it comes to like executing the trade, I just find myself freaking out, and at the end of everything, I will not place the trade, and the trade will come as I analyze. So I don't know, how can I overcome this fear?
You're rich. That's why you can't overcome it. Until you need money, then you overcome it. Yes, now, because like, how would you point blank, and you're seeing your trades players and you're purposely not picking them? I don't understand. So the thing about not being able to trade, I was in your position before. Like, I was so traumatized from trading that I didn't even want to look at. I told you guys I abandoned trading for 6 months. Then I realized that during those 6 months, I had so many good setups, and I couldn't just let my potential just be wasting like that. So it's only when you've realized to yourself that you've missed so many opportunities that would have made you. That is when you can pick yourself up and start again, right? It is only through challenges that champions are made. You can't just keep laying down on your bed and expect the opportunities keep coming to you. No. So opportunities are around you, and you just need to take hold of them. Obviously, there will be losses, but you just need to pick yourself right back from every loss and just keep going, right? So please, that fear, delete it by yourself today. There's no book that will teach you how to eliminate the fear of trading.
Good evening, sir.
I'm there, bro.
Good evening, sir.
Evening, what's up?
very fine, sir. Sir, please, I just want to understand something. You were explaining something about. Can you hear me, sir?
I can hear you.
Explain something about trade rules with your risk and 20 traders when you are not really sure of your strategy. Yes, my question is that let's assume someone's trading with a 10 trade on the account and I'm taking the first trade in a day. He or she needs SL. Will you advise that such person to trade again, without considering to be like forcing a trade, or will you just say person should for the day and resume tomorrow?
No, I already said there's a mass number of trades you can take per day. I dropped that as well. So don't, because you've taken a loss and you retire for the day. I will keep saying it. Don't let one failed opportunity blind you from recognizing the next great opportunity within you. But there is a limit to how many losses you can take in a day. Take the first loss, take the second loss. When it gets to the fourth one, you can then close for a day. Why? Because if you take the fifth one, it not just affects you, it also kills or destroys your capital. So take first, take second, take third. If you see the fourth opportunity, take it. After the fourth opportunity, don't take. That's just it. So you have like the limit of trades you can take per day based on your drawdown.
All right. Thank you.
Yeah. Anyways, we'll call that a close for today. It's almost 11, 2 hours. I'll see you guys on the next one. Take care.